Okay, so welcome to the India market review. We are doing this time on Saturday. Usually we do it on Friday, Saturday 11th July 2015. And what you should be able to see on the screen are the notes that were sent out for last week's IMR, sort of in a slight experimentation mode as far as IMR is concerned, trying to try some new stuff, and I would love to have your feedback as to how it goes. Basically, the idea is to make it more hands-on, more practical, more trade investment oriented. So earlier we used to look at the Nifty and once in a way the Nifty junior stocks, and last IMR we started reviewing the uh, daily market report, and this is how it looks, just in case you were wondering. So, and we took some stocks from that, and I did get some feedback from some others in the Wealth Lab and the mentorship program that went off quite well for them. Some of them did take some trades from some of those discussions last week, which were stocks all outside of the Nifty Junior, and they did make some decent returns in a week, 10 days. And I just thought, okay, maybe we'll try this a little more. But I would love to know what you think and what you think would be best forward. So let's have your feedback on this, right, as we go along. So before we jump into today's IMR, just let's quickly review last week's notes. Hope to be able to do this on a regular basis going forward to see what went okay and what worked, what did not work. So of course the Greek referendum came out, and then today was the day also that Greece parliament has basically approved of the same thing that the Greek voters rejected 1 week back in terms of the austerity measures so that they can get the third bailout package from the European Troika. So I mean that begs the question: what was the whole referendum all about? It's just turning out to be a joke on everybody, uh, not least of all on the Prime Minister of Greece himself. That after doing all that drama and spending $22 million or euros, whatever it was, on that referendum, you're just going back to square one and basically agreeing to the austerity conditions that uh, were proposed. Also, um, so it's a big climb down by Cyprus, and if you saw the post that was put out on the Yahoo, sorry, not the Yahoo, the WhatsApp group on BIC about the climb down for him, and that some of the people in his own party did not vote for that referendum. I mean, sorry, did not vote for that parliamentary vote yesterday night in Greece. But anyhow, it has gone through with some of the opposition parties actually who are pro-Euro, Europe, and want to stay in the Eurozone actually coming to the rescue of um, the vote. And now it has gone to the Eurozone ministers. I think they're meeting as we speak. And I don't know, maybe if somebody is just tracking live news, maybe while this session is on, or worst case tomorrow, we will know what the Eurozone has decided. Some of the indications are that they will probably, they have said that this could be the basis of an actual negotiation for um, further bailouts. But one question that is still a begging is, even if they agree to this, whether Greece will actually implement this going forward. So 3-year bailout, 58.5 billion euros could go up to 74 billion. They're already up in their neck up with $320 billion debt. I have no idea how the hell this is supposed to work. The numbers just don't make sense. So what is at stake? I don't seem to understand in terms of the financials. What's at stake is the Eurozone perhaps, and what's at stake is Russian influence indirectly through Greece if Greece leaves, and maybe those are the things weighing on the Europeans. There are also personal issues with Angela Merkel not wanting to be the one under whose leadership, the Eurozone started to disintegrate, and all those things. So anyhow, so we are back to square one. Um, just shows how fickle politics can be, and never to say, it's over. So we are actually back to this whole thing about the referendum and how it will, so this time it's not the referendum, it's just the European Parliament, and depending on this, we could have Monday, which moves up or down significantly. We were expecting that last week, but that did not happen, as we all know. The market sort of just took it in the strides. Like they keep saying, the market seems to know a hell of a lot more than what we give it credit for, and maybe that's a good lesson. So we were talking about a gap up, gap down last week. We were talking about doing strangles and straddles and all that stuff, and none of that would have actually worked because the market actually did not do any of that. So I think there was a thought. I mean, if there is any salvation, then it is like everybody was wrong in their call of what the markets might do, and well, that's it. So they just seem to have gone on, and the same questions. I mean, part one, what do you do with the current holdings? Do you sell some, most, and all? I think the question is maybe now more in favor of you might as well just hold it, and it's unlikely at this point that Greece is going to get thrown out, and even if it does, it looks like there is not going to be a huge ramification on the global markets. What could be, however, is China, and this is something really, really different that we will talk about in today's session after some time. Then we talked about fresh positions last time. We do not know what the market will do, is what we said, and we need a strategy that will make money either way. I think that has changed now to talking about perhaps making money in a certain direction. The tenacity of the market so far seems to suggest that it's not really in a mood to go down. The American markets rallied significantly over Friday in anticipation of solution on Greece, and from all the noises, political and stuff coming out, that seems to be the case. So I don't think there's the probability of a downside move seems to be limited right now, and the bias seems to be on the long side. So all this long short strategy simultaneously goes out of the window. I think we should basically be looking on the bullish side. At least that's my opinion. You can look at maybe bullish spreads to be implemented, but of course, given that you can't do that now, the market would have reacted to that on Monday morning. The spread is, of course, just a academic discussion right now. Okay. We also said that find some really good stocks on the long side with a very high potential and probability of going up over the next few weeks to months. And especially if there's a correction, buy these for your longer term portfolio. And I think we discussed some last week. Not sure this is the complete holding. If you want, we can do a quick review of some of these stocks and see how they went. Did anybody read the Ratnakar Bank RHP, or is it out actually? I'm not sure. But if it isn't, I think the draft trading or red herring prospectus was available on the SEBI website, and if it's there, you should still go get it. So we said except for realty, infra, and metals, all other sectors indices are quite bullish. FMCG and healthcare are underperforming a bit. So let's check on that in a while. What's really doing well is the Nifty Junior. There seems to be a lot more strength there, and that seems to have done again good sometime this week. And is the small cap index waiting for a breakout? So we'll have actually, let me just move that to the other screen, and then we can review that as it comes up, this discussion. So this is just to review last week's stock. So let's put up Nifty Junior. Right, so CNX Nifty Junior quickly, and you can see that it is very close to its life high. There's a double top there at 20,500. In my opinion, hardly in a mood to go down, more like a flag formation here. So you have the Nifty Junior going from, I think, a conservative 19,700 to 20,500. That's a 800-point move. A flag breakout should take it to about 21,300 on the Nifty Junior. It's sad that the Nifty Junior index is no longer traded. Otherwise, this will probably be a good opportunity to go long on it. So that call has held out, that the Nifty Junior has done well. Let's look at, you should all have these notes on your side, so please do open them and we can review it quickly. We said reality is probably not doing well, and just bringing that up, and you can see that indeed it has basically gone sideways, tried to make a up move but basically corrected over Friday. So that's also turned out well. Then CNX Infra, we said may not do well. Looks like right or wrong on that. So CNX Infra did go up on Monday and has actually continued to rise. So the issue was with this resistance, if I recollect correctly. So let's put that trend line. Okay, so that is there. We'll come back to this in a while. And then we talked about CNX metals. Where is that? BSC metal probably. Yeah. All right, so BSC metal clearly just cracked in the whole week and just went down after that. So you can see that support very, very clearly broken. And as a matter of fact, if this support breaks of 8,750, then much lower levels could happen on the metal side. So that one has worked out quite well. And then we talked about FMCG. So 1 second. Okay. So FMCG, as you can see, just has come down, definitely done worse than the overall market. And last of all, the healthcare index, which we said has underperformed, and well, that's actually done well, right? So I guess a 50-50 result on this. And then we spoke about some individual stocks. Let me just bring up that list here quickly. IOC, Hinpetro, BPCL, Ultratech, LIC, Housing Finance, Coal India. And then City Union Bank, Cummins India, ABB, Ashok Leyland, UPL, Infratel, and Kitex. And I just want to very, very quickly go through that. So IOC, so Indian Oil Corporation, so these are the stocks we said would do well, and well, IOC did go up, but then it actually also did come down. Still, I'm personally still bullish on this. I would expect it to take support and rise. So this is IOC in the Petro. So that made a new life high, as you can very well see, right? So that's gone in direction of our discussion, and then that is now gone up on good volumes and is actually coming down on low volumes. However, there is the important spinning shooting star there, which needs to be observed. BPCL was a big surprise because it did come down quite significantly on Thursday. But there's also one point to note on BPCL, which is that it hit the return line, the upper yellow line that you can see. It went beyond the return line and then actually came down. So it was, in a sense, overextended, and the correction needed to happen for it to continue in the rhythm that it has. So this could come back down. It has taken support at 865, but for all you know, it could go down all the way to 840, 810 before the uptrend resumes. But again, this large red candle is definitely a bit of a concern. So IOC, BPCL, and Hind Petro have gone up, but this correction in between is something to watch. Then we have Ultratech Cement, and yes, that has clearly gone up, and I believe that this is on its way to a life high. Volumes are a little bit of a concern, but this could just be because the resistance line is here at 3,110, and it's just a question of breaking that resistance. But however, not the sort of happy volumes that one would like to see in a strong up move. Maybe it's just tentative right now, but should be heading to 3,350, 3,400. Then Coal India. So Coal India made a new life high and then sort of corrected a bit, right? On Monday it came back down, and the volumes again going up on good volumes, and then 2 days it comes down on low volumes. If you look right at the bottom of the chart, same sort of picture happening this week, but overall the volumes according to me are not as nice as they would have been in Feb March. But if you take that out, then okay, I mean, I would have liked to see happier volumes here. Maybe a rest and a pause thing. You're seeing MACD doing a crossover, however it is in a positive zone. So that might not be in a hurry to move up right now, but nevertheless something to keep a watch out for. By the way, in one of the Wealth Lab reports that we saw, fundamentally Coal India seems to be on the expensive side fundamentally, fundamental metrics vis-a-vis other mining companies. However, the other mining companies are all in the metal space and iron ore and stuff like that. And Coal India is very unique that way because it's in the coal space, and whether that industry deserves or has historically had a fundamentally different rating level applied to it by the market, I don't have information on that. And if any of you have any insight, please do share. Right. So Coal India, I'm still on track till that trend line breaks. Wouldn't worry about it, but looking a little iffy right now. Maybe a sideways, a small correction before the up move continues. Then we had City Union Bank, right, and that is a weekly chart, daily. So that has not gone up. However, it is taking 100 rupees support on the lower levels, 104 on the upper side, and I have this opinion that when stocks move from double digit to triple digit, as in this case, the market sometimes, not sometimes, most often takes some time to adjust to it becoming a three-digit stock, and then you'll have another move. So at this point, in my opinion, still looking good. Consolidation along the way. 105, 106 breaks out on good volumes, then much higher levels are definitely possible. In a sense, there's a good consolidation for 2 months. If it goes on for longer, that's also fine. It's been a multi-bagger return of sorts. Last year it was 43, and now it is sorry, in 2013 it was 43, and now it is 100, and could be going much higher, but the uptrend has definitely weakened and one would need to watch it carefully. Then we are looking at ABB, and ABB, well, we said it was good. Well, it did go up, but not really able to break that 1400 convincingly. Volumes have picked up, and that is definitely encouraging. So ABB is, I think, also on the what would I say, the buy side, and not very far from its life high, as you can see. And once it goes to 1650, then we should probably see better moves. However, please note that at this point ABB is quite expensive fundamentally. Haven't been able to really get some good fundamental reports on that, and we'll just have to wait and watch, right? Okay. All right, so that is ABB, then we looked at Ashok Leland, and we said that was also strong. Well, but that's basically stuck at 75, and you can see it's undergone a 3-month consolidation. And if I can make this weekly chart, then you can see that the consolidation has the volumes have diminished, which is good. That is what you want from a consolidation perspective. And overall, well, interesting that the MACD is actually so negative, right? Not negative, actually, just cooling off. We'll just have to, I think, give it some time to. Uh, why did this resize like this? Right. Right. We'll have to just, I think, let MACD uh, do its turnaround on a weekly basis, and then we might see the next move. Okay. All right. So on that note, by the way, Ashok Leland, Tata Motors got a 940 crore order to supply 1,200 multi-axle, multi-wheel, heavy-duty trucks through the Indian Army. Some 1,200 of them. So that was good for Tata Motors, but Ashok Leland and Mahindra are in the fray. So make this make in India, this defense upgradation thing, maybe small, pieces of it sort of being let out at this point, right? Okay, so that is Ashok Leland. We finished ABB, we finished CUB, UPL. All right, so that has clearly not gone in our favor. It has come down actually on higher volumes, which is not good. So I think UPL is an exit. If you are holding UPL at this point, you should be out of UPL, and especially if it breaks 500, there is no question of holding on to it. So UPL, okay, right? So you can see it did fall on higher volumes. It could take support at 500. We'll have to wait and watch, but UPL would not be on my buy list anymore. Infratel, alright, so that's also going sideways, really not showing strength now. And I do think actually that in case it breaks this trend line, which at this moment it seems to be wanting to do, right? Yeah, all the moving averages crossed over. Definitely a sort of double support around 430, 425. If 425 breaks, then one should be out of Infratel, in my opinion, and reinvest in somewhere else. Then we have Kitex, we said was doing well, and well, has gone up a little bit, but seems to be doing a consolidation again, right? So that is Kitex, and then lastly we have Cummins India. And whoa, that has done exceptionally well for us and has jumped from 920 to 980 and well, consolidating again. So yes, so this has been definitely success of all the calls. So apart from why is it not go moving? All right. All right. So this one would still be a hold in my opinion. Life high is being made. So all in all, I would say maybe a 50-50 thing. Oh, I forgot to put LIC Housing Finance. And that has definitely done well. And as a matter of fact, there is a flag on it which might be breaking out, right? So LIC Housing Finance, the flag has probably in the verge of breaking out, still needs a little bit more conviction. So that has, I think, again gone in our favor. 440, 435, excellent support, probably headed to 485 to 495. So if you were tracking this during the week, I think you should have made some money overall, especially on LIC, BPCL, not BPCL, IOC, maybe a little bit on Coal India, Ultratech, and uh, and Cummins India. Right, all the others so, and UPL, Infratel, I think could be exits. Okay, so that is last week's review. Let's delete this and let's come back to our review for the week. Right, China, artificial controls by the government. Right, so we're now looking at the 11th July and situation, and basically what we have is Greece, and like I already mentioned, we will know about it either late tonight India time or definitely by tomorrow morning. There's nothing much more to say on Greece except that even if they do get a bailout, I think it's just kicking the can down the road. How they will pay back, I still beats me. They will have to get some sort of debt relief, and that just might happen. Who knows? It's a question of selling that idea to the northern European states to get the population to somehow agree to forgiving some debt. But even if they do that, then there's a whole ton of other, Pandora's box that will get opened with Spain and Portugal and all that stuff. So let's just wait and watch. No point speculating, I think, especially after we've seen the useless referendum and the Greek government completely backtracking from their maybe adamant position, and who knows. Right, so I think the next thing is China, and China is beginning perhaps to catch the attention of uh, the world in terms of how serious the things there actually are. Telling that majority shareholders who own more than 5% cannot sell the shares, telling the Chinese government companies not to sell the shares. All right, fine, done. So you made some selling impossible to do, but the issue also then is that um, as and when you remove these controls, somebody is going to have to take the loss. That's the whole point. So the Chinese government might take the loss, the Chinese billionaires might take the loss, but somebody is definitely going to have to take the loss. But I think the big issue which is at hand is the uh, uh, loss of confidence by the population or the participants in China's markets, and are they going to come back? That's a big question. Will the vast retail population, which is into the Chinese markets aggressively, you've been reading reports about them borrowing money, selling houses, etc., will they be able to recover? And what's basically going to happen after that, right? So uh, really tough situation. You're just putting bandage, in my opinion, on what is likely to happen in the future, and then that's it, right? uh, I am reading an article by Mark Mobius on Business Insider, and this was posted on the BIC WhatsApp group. Some of you might have already read it. Okay, and if you have not, then maybe you can just bring it up. Just a pain to bring it up on the web anymore. So he says that our strategy is to wait until prices are so attractive that it's time to look for further long-term opportunities. We believe that that point is close with some stocks, but we probably haven't hit the bottom yet. The good news is that based on market studies we've done in the past, these types of bear markets, and I would deem this a bear market, tend to be short in duration. They don't last too long, and when the recovery comes, it tends to be bigger in percentage terms. I think we are all probably getting close to a capitulation point in China. We should see at least a short-term bounce soon, and many investors who didn't get out before may use that move to do so. Then we would expect to likely see sideways action until the market can hopefully recover, provided valuations are good. He says that Mark Mobius's view that China story is still intact. China is still growing at a good pace, and we believe it's an important global market that we want to have exposure to for the long term. We know that China has slowed from the 10% plus growth rates it has had in the past. It's still a very big, fast growing economy, and we believe the merits of investing in equities in China. If we can do so at a lower price, so much the better, right? So he's basically saying that valuations are appearing now. So that's a important point to note, I think. Please note when you talk about a 30% fall um, in the index. So if the index has run up 100% and then it falls 50%, that's back to square one, right? So Shanghai index. Does anybody have the Shanghai index symbol? Okay. Hmm. Okay, I found something interesting here. This is the Dow Jones Shanghai index, right? And you can see that, so this is not the Shanghai index itself, this is the Dow Jones Shanghai index. I won't be surprised if there's some ETF on this for the attention of Madhu. So this index crossed 300 after struggling on it from 2012, 2013, 2014, and then you can see that it went from 300 to 700 in 1.5 years. I mean, that is just madness. I mean, that's ridiculous. I'm not sure what happened in China to warrant such a move. You didn't have any political thing or the economy growing. So this was in the face of the economy not growing. So let's just bring back perspective to that. And what you have now is from 700 it has come to, as you can see, 506. So that is 20% cut. And if you look at uh, what, it's more than 20% cut actually, a 25% cut. And at least let me make this daily. So this is the index, and it's I hope you can see it. Let me, can't make it bigger. Okay, let me not waste time. At this point, some support at 450, it has bounced up, but please note that if I can make this smaller, and you can see that this is actually not a very what would I say, this move, last candle that you can see here with the long upper shadow, not a good sign. So again, if you go back to Mark Mobius's view, might use this bounce to exit, and then you'll have another round of selling that could come. So the Shanghai index is something that is still something very much under threat, right? Of course, so far we've not had any repercussions on India, but the question is, what could it have in store for the future? Okay. Of course, we are insulated to a large extent because of foreign money is very, very little in the Shanghai market. Do not confuse the Shanghai market with the Hong Kong market. They're two separate. But still, my longer term thought is that if sentiment gets severely damaged in China, which I think it might have, and participation diminishes in China, and then there's a loss of confidence in, let's say, not the government as in politically, but in the government's ability to manage these bubbles. So we've had a massive real estate bubble that we all know of. You have those ghost cities, and then now you have the stock market crashing. Now, where do you hide? Where do you create wealth? How do you create wealth out of nothing, where there's fundamental unsustainability? And what could the impact of this be over the next 6 months, 1 year, 2 years? I think that will be the longer term impact. Could you actually see China slow down because investment money is less willing to invest. Basically, I don't know if that made sense, but people who wanted to invest, people who wanted to trade, people who were looking forward to doing something are now so worried, or have now basically decided that they don't want to do that and they're going to hold on to cash. And with no avenues left for uh, high growth, and if the sentiment basically sours a lot, then this, in my opinion, is going to have a global impact. Two countries which are already severely suffering from this is, one is Australia and the other one is Canada. Australia's national budget has gone for a toss, especially after the Chinese slowdown. The Chinese are importing far less, and whatever they are importing is at a far lower price. So the Australians are in not sure, how they want to respond to this. The other country is Canada, which has been a major commodity exporter. Of course, the South American countries also, and to a small extent, New Zealand. So in case some of you are looking to, I don't know, find opportunistic investments, these would maybe some of the places that you want to consider: Australia, New Zealand, Canada, and of course uh, there is South America, but since language is an issue, we don't look at it much. Ravi is saying, I was under the impression that most of the action in China is in the bubble created by startup valuations. They keep reinventing themselves depending on government stand and policies and are now highly overvalued. Well, I'm definitely not a China expert, Ravi, so I'm not sure. Um, but even if you're talking about startup valuations, I don't think it's just startup valuations. Startups, IPOs have gone up 40%, 50% in 6 months, 100% more in China in the last 1 year. But you can keep reinventing, but are you reinventing on something fundamentally required by the market is the question. And if that is not the case, then what do you reinvent on? There can be a lot of opportunities that. So you're saying that is not the case. You want to chip in? Please feel free. Why don't you unmute and might be easier instead of putting it on chat. Maybe.
Hello.
Yeah, Ravi, go ahead.
Yeah. So whatever little reading I've been doing, it seems that a lot of this overvaluation which happened in startups, because depending on what government was promoting in terms of policies and what segment they wanted to push, so startups would raise money in one phase and then quickly reinvent themselves as a different startup and go again for a new valuation, and that is what seems to have led to the problem. So the impact might, what is not clear to me is the impact across all stocks. Is it really going to be lasting? Because if it's around startups specifically, then there might be a solution in the near future. If it's not just around startups, then we should see a major issue in China in that sense, in line with what you were suggesting. That was my thought.
But then how do you factor in the fact that over half the companies on the Shanghai market had suspended trading? I mean, those are definitely not startups, right? Those are some of the large, well-established companies. And then why would the Chinese government need to force these um, measures where you can't sell if it's just a startup and it's just restricted to a part of the market? Is it not more widespread?
It's actually widespread. It was started, the trigger was what was happening in startups, but it's widespread.
Okay.
And I could come back on the mail group with more information, but honestly, this is just one couple of articles I read, and I was wondering about this. I thought group might know.
Okay, sure. I mean, worth exploring because, and at least I think some of us are looking at investing abroad, and if China now presents an opportunity, then who knows? I mean, if there is more substance, and we need to dig up into that, and we look forward to what Ravi can send us. That this is just a not such a big thing, and maybe a restricted thing to the startups. It's just sentiments that have gone down, but maybe things are better fundamentally, then sure, why not? I mean, maybe time to look for some picks on the Chinese market for those of us who are interested. Great, Ravi. Thank you so much for that input. All right. So with that, uh, let's get back to India. Fortunately, because China is such a domestic investment play, the rest of the world so far has not freaked out. But like I said, if the sentiment damage happens to the populace in China because of this, then there's a price to pay. There is definitely a price to pay. Right. All right. So with that, let's jump into the. I want to do two things today. One is look at the sector overview, of course. So let me just get that started. And the other thing is do uh, fundamental overview of the Indian market. I think it's an appropriate time to do that. We are also getting into results season, so let's put that up. Right. So domestically, results season is on its way, and I think again there are some mixed opinions about that. Some good results. TCS already came out, of course, and the results were not that great, as we all know, and the TCS stock actually came down. But this is just the beginning. We'll have to wait and watch whether the results can support the sort of high valuations we have in India right now. We are definitely not on the cheap side, uh, and what that could mean going forward. So I think the fundamental overview at this time is highly appropriate, right? So we'll do the sectors and then we'll get into fundamentals. All right, so this is the Nifty chart, and what you can see is that basically, it went past the 8450 mark, tried to go above that 8550, but basically got turned down from there, and 6, 7, 8, right? And then we actually have a gap in the Nifty itself. So there is about a 50-point gap here that happened on Wednesday, and then this is the move on Thursday, Friday. You have a lot of support at this point in terms of long-term moving averages, the 50-day, the 100-day. So it's really a difficult call technically to say which side this will go. I think on the top side, unless it breaks out of 8600, and on the downside it breaks below 8200, it's best to remain neutral on the view. So those would be the, I think, levels to watch. A definitive move below 8200 and a definitive move above 8600. A 400-point range is what you want to watch out for, and of course that closure of that gap. uh, I suspect that moving forward for the next few weeks at least, this will be very event driven. I don't think technically there is anything to now say anything about the Nifty in terms of direction. I would remain a neutral bias to that, right? Okay, uh, so that is the view on the Nifty. And then 1 second, Ravi just sent a article from the Economist. So uh, then Economist asked me to do some surveys and all sorts of things. All right, so he sent a link. Please have a look at it, and if there's anything on that, maybe we'll come back to that at the end of the session, right? Okay. Okay, it's going to take a little time to read. All right, so I'll have a look at it later. All right, so Nifty basically sideways view and range bound for now. So I think it's going to be a sector specific and a stock specific story, at least during the uh, result season, and also with whatever might happen in Europe and China. But the longer this Europe China thing happens, the more and more there is time for people to sort of factor probable falls into the market and then sort of prepare for themselves. And those who are the most savvy guys would hedge or get out or take appropriate measures, and those would be perhaps the people who would um, um, support the market when it goes lower, right? So who knows, just speculation on my part. All right, so that's the Nifty. Let's look at the bank Nifty now. All right, so the bank Nifty, on the other hand, actually has been doing quite well. The Actually, let me bring up PSU banks. Right, where is that? Right, and I'll put those next to each other. All right, so on the left you have Bank Nifty, and on the right you have the PSU banks, right? And actually, on the right you have PSU banks, on the left you have Bank Nifty, right? Right. So in the last couple of days, at least in this week, you can see that more or less they have been the same. But actually, if you looked at individual stocks on the PSU bank side, they have actually done quite well, especially the last 2-3 days. Big difference for you to note here, very interesting, is that the Bank Nifty overall is well positioned above long-term moving averages. However, the PSU banks are positioned well below the long-term moving averages. Very interesting sort of dichotomy between obviously the PSU and the private sector banks. Right? So this is a place to definitely watch out for, and most definitely. So if I bring the Nifty here, right, you can see the clear contrast between how, so you have the Nifty on the right and the bank Nifty on the left. You can see that the bank Nifty is clearly stronger than the Nifty. So there is clear relative strength in the banks, and that's one place that we should perhaps be focusing on and looking at banking stocks for for long positions, right? Okay, now let's then do our usual sector review. So I'm just moving this to the other screen, and I'll make a note here that banks showing strength, right? Nifty sideways till between 8,200 and 8,600. By the way, I don't know, anybody willing to volunteer to make notes during the session, just short ones, then please let me know. Maybe we can figure out something to make these things faster and more efficient. All right. Okay. CNX Auto or the BSE Auto clearly weak. Really no strength in that right now. 18,200 is good support, but this could, I think, easily get broken, and if it does so, then maybe even till 17,500 is a level to watch out for. Okay. And then we have consumer durables. It's usually not a space we look at, but this is definitely looking interesting and healthy. You've got a sort of triple top formation there, a sideways move there, and perhaps itching to move out in that space. So autos weak, consumer durables sideways. Right, waiting to break out. If consumer durables does break out of 1100, 11,000, then definitely a place to invest. Capital goods has definitely been the place to be in, and I think it is set to the way you see this moving, especially the last 2 days. Good shaven bottom candles, almost marubozus. Oh, especially the last 2 weeks. Nice moves. Everything looking honky-dory and fine on the indicator side, and I do believe that this is set to go past that level and make a lifetime high attempt, right? And so capital goods would definitely be one place to look at in either way. Even if the market were to move down, then I think capital goods is something to maybe find opportunities in. FMCG, uh, when you've got something like capital good chart, I don't really know why you need to look at the FMCG chart. However, you could look at it for a shorting opportunity should it break 7,650, and FMCG stocks could get shorted. By the way, what's happening to the monsoons? If anybody has any input, at least here in Bangalore, the monsoon seems to have deserted us. There were a few good rains, but that is it, few. The usual monsoon has definitely not happened in Bangalore. I've been checking with friends across town in all over the place, BTM layout, JP Nagar, Whitefield, uh, Hebbal, and everybody is basically saying the same thing. Right. Yeah, Delhi has been raining non-stop for 2 days. It will be in the news because all the netas will suffer and the public will suffer. And yes, there are overflowing drains. But I'm generally talking over, the agricultural aspect of the country. If anybody has any inputs on that, has the monsoon been on track? Has it been online?
No,
I really don't know.
yeah, in Bombay and Maharashtra, it's been very dry, no rains at all, absolutely. I think the monsoon has moved due north now, and there are heavy rains in Delhi
Right.
and northern parts of India, but central India, absolutely no rains.
Okay. Thanks for that, Madhu.
And I think,
Yeah,
yeah,
go
I
ahead.
guess that's the same case with southern India also. Now it's dried up, not much of rains.
Right. Okay. So please be prepared for consequences on this. Uh, Food prices, harvests, and who knows, next year we might have Karnataka Tamil Nadu feud again if the reservoirs have not filled up. And so I think the monsoons definitely a source of concern, and things like FMCG or agriculture related things could be a place to both, I think, shorting and longing opportunities. So things like irrigation might do well because there's less water and irrigation is required, but other things like fertilizers and the wider macro aspect of it might not do well. I don't know, it's a mixed bag, but I do believe there will be shorting opportunities there. Okay, then looking at healthcare, so this has definitely continued to do well, uh, and another place to perhaps look at on the long side. Then we have IT, BSC IT, CNX IT index. You can clearly see the breakdown from that support level, and it's probably heading lower. Don't really see any reason to believe that if TCS has not done well, why the other companies would necessarily, beat, and why. I very much doubt that TCS is going to be the exception. There might be a few exceptions in companies that do well, but I think TCS has set the mood very clearly on the IT side. So the IT is definitely short, right? Uh, FMCG and IT, right? And then we have the metal index. That's clearly just, tanked, and oh, so what was this event? I mean, time is so flying so fast and so much I'm forgetting. There was a reason why this was it triggered by China? Yeah, I think it was triggered by China, right? This was before the controls came in 3 days back, and then everybody freaked out on the commodity side, and all the metals and everything just tanked. Again, excellent lesson on being on the right side of the larger trend. The larger trend is down since July, 1 year now. And please note that if the metal index now breaks 8,750, then really not much support, right? There is some support long way back, maybe somewhere there. Okay, but in between, this is not really a place for great support. but we'll put that anyhow. So we are right now at 8,800, and we are talking here about perhaps 8,000. So that's a 10% correction that could still happen on the metal side, right? So you just have to wait and watch. There is absolutely nothing here to suggest any strength at all. This is just a spinning top which is there and a pause in a continuing downtrend. So let's wait next week and you'll probably have an answer when something like this happens, right? Please note, I just want to draw your attention to these 1.5 weeks here where it did rally, but then after that, it just continued in the longer term downtrend. And once this double bottom decisively got broken out with a gap down breakout, actually a very significant one, there is going to be definitely a lot of selling even if the market does bounce back up. um, One thing to uh, um, keep in mind as far as this Chinese impact is concerned is that if China slows down, commodity prices are just not going to rise, and that is going to impact every Indian mining company and every Indian company that is making anything out of this. So even if you're making using iron ore as your input, bauxite as your input, your output prices are also going down. Please, let's remember that. And it's very tough to maintain margins or increase margins, and margins will probably get squeezed. So this is probably a multi-quarter impact that we are talking about in terms of earnings, in terms of subdued prices, both on the raw material side and also on the finished products side. So metal is definitely something which should not be on your buy list, and could perhaps be shorted. I mean, it's a tough one because it has already fallen from 14,000 to 8,000, 8,800, almost a 40-50% fall, and then you're wondering how much more can it fall. Well, it can. Remember, it was at 6,500 in November 2013, and if that happens, then why not another 25% fall from these current prices? It could very well happen. And then we've got mid cap, right? So we already saw, I'm just going to skip this since we already saw the Nifty Junior earlier. And you can see that it still has some strength, and that is where if you're looking for longs, you need to poke your head. Uh, BSC Realty, another place where things are just not getting better at all. Are we headed back to its life lows of 1,200, 202? I don't know. That's another 200.4. That's be about a 15% fall from current prices, and that well, really could just happen. There's again nothing on the charts to indicate hope at this point. All very tentative moves up, as you can see. This is a weekly chart. Uh, it's much better to just stay out of this and perhaps look at this as a shorting opportunity as things go higher. By the way, I got an SMS today, first time. I'm sure a lot of you are getting SMSs for 2-bedroom apartments, 3-bedroom apartments all over Bangalore. But I got a very curious SMS today. It says, pay 2 lakhs and own an apartment in 4 places in Bangalore. And I was like, wow. So we had a class today and I was reading this. Yeah, so did anybody else? It says pay rupees 2 lakhs, own flat. It says own flat in at 4 locations: KR Puram, Begur Road, Marathalli, and Whitefield, and gives a number to call. Anybody interested? Let me know. I'll forward it. I'm not investing, but if you do, let me know how that goes. Right. So I think things are really getting desperate on the real estate side. If you're getting SMSs like this. And I can only expect that things are going to get worse before they get better, and that better is not in the short-term future, not definitely this year, the way I look at it. For those of us who want to buy real estate, however, probably an excellent time to go out, maybe shopping and look for and bargain really hard. Okay, you really might get a fantastic deal, and in case you do, let me know. Thanks. Okay, so real estate definitely not looking bullish at all. So that's let me Put that in my list. And then we've got a small cap index. Okay, so that's hardly at its life high, but we said it's eager and itching to break out. You can see a sort of, I will include this part, 1, 2, 3, 4, 5, 6, even this 7, 8, 8 multiple tops, and it is just, refusing to go down at this point. You can feel the eagerness with which this space wants to rise. So I'm not sure if this has anything to do with those valuations Ravi was talking about in China. Does Indian small cap companies going into rich valuations? I don't know, but this is definitely interesting. Could find some really good trading. I don't know about investing opportunities, but definitely some good trading opportunities in the small cap space, and that is something that we should devote time to as soon as we can. I don't think we have time today, but we should do that. Those of us who are in the Wealth Lab, let's please make a note of doing this maybe in the coming 1 week. At least one day, we need to get that list of small cap stocks and do as good a review of it as possible. All right. Okay, then what am I missing? I'm just skipping through some unnecessary ones, and then what have we missed? All right, BSC Power. So BSC Power Index, that is definitely showing some hope in my opinion, and I would definitely put it as a potential uh, investment opportunity. Okay, so again, not far from its life high, this power thing, but again, there's a error in this um, index, and the error is that the BSE has provided data on this only from 2011. If this data was available from 2008, I'm not sure exactly where or how low this would be, but well, and yeah, this is what we have, so we have to just live with that. It's taking some really good support at this 2000 mark. Okay, and in terms of many things, including technicals, it is definitely showing some uh, uh, I think my sense is like it's this willingness or eagerness to go up that it seems to convey to me. And power stocks, I don't know what reforms. You need a lot of reforms. Power in terms of fuel inputs, whether it's gas or coal. You need reforms on the transmission side. You need reforms on the debt side. You need a lot of things. And if the government actually does something about it, then who knows? There is some really interesting article. I just saw the headline. There's some $16 billion worth of power capacity sitting idle in India right now. And that's a fantastic number. And uh, I hate to one. I just wonder what the promoters or the management of those companies are doing and how they're paying off their loans and managing to survive. There has to be something done. If it is so bad at such a macro level and such huge numbers, what is the stress on banks then from non-performing assets or potential non-performing assets? So that is one thing. But the charts somehow don't seem to say that. And this is a weekly chart, and I'm sensing more bullishness than bearishness. The only critical thing is for it to just cross these long-term moving averages, and once it does that, I think par could just keep jumping. So, well, keep a lookout for those power stocks, in my opinion. And it could, if it just maintains this trajectory in another 1 or 2 weeks, it should be above those moving averages, and then you've got it in bullish mode, right? Uh, so that is power, and then I think that's it. CNX IT, since this is a tradable index, you can see the impact of the TCS move, really not healthy at all. Uh, Really nothing much to expect. and could possibly be going down to 10,300. So I already said IT is potentially a shorting candidate. Okay. This was Nifty Junior. I hope just for revision. And then we've got CNX Energy. So there probably is some sort of an overlap between CNX Energy and BSC Power. If somebody can, just maybe look into that and look at what are the common stocks, then we could, have a better discussion. So right now we've got this multiple bottoms, that 8250. It broke out of that resistance line, but right now has just broken back in below that. Taken support at the 50-day, 100-day moving average, and for now just sitting there, and there's really nothing much to say beyond that. Question is whether this will take uh, support at these levels, or is this the start of a fresh down move? Little tough to say at this point, so I think best to wait and watch. But I do believe over the longer term, this is probably more set to go up. You can see here that after 3 green candles, maybe it deserves a 1 week, red candle, and then the uptrend could perhaps resume. So my bias on the energy side, so power, energy, all in the same long side space, right? Okay, and then we did the FMCG infra. So this is BSC, capital goods, infrastructure, all sort of the same boat. Just one is the NSE index, one is the BSC index, and this is also showing strength. Apologies. Okay, so infra done, MNC not interested, pharma looking good, right? That's it. I think. Right, so if you need, then this is basically the let me take this off. Okay, so all these are the strong ones: banks, capital, consumer durables, energy, power, capital goods, especially capital goods and banks, and power is what I would probably look at. Consumer durables, okay, because of the monsoon thing, not sure exactly how that is going to pan out. And on the weak side, then shorts on realty, metal, FMCG, and IT, autos also perhaps. Okay, so that's the sectors. Now what I want to do is where did that disappear? Right, I want to bring in some work by Sid here, and Sid has created this wonderful histograms for us to look at how the valuations are on uh, relative to their historical setup. So I think if we go through this, then we can tie up the technical aspect along with the fundamental aspect and get a far better insight into what the market is up to. Um, Let me just start with the CNX Nifty here, and what you can see, or what you should see, is that the CNX Nifty is at the higher end of its valuation zone. It is at 22.12. This is data as of today. So as usual, Sid did a fantastic job of updating it and sending it across today. So this is the latest that we have, and we have 22.12. You can see that it's definitely not close to, say, about around about 16, 17 would be a really good time to buy it from both fundamental support level, and this is on the expensive side. So if the results continue to disappoint like TCS, we could have a slight down rating on this. And even if we go down to, let's say this is 20, 21, 20, 20.5, say around 20, you're talking about a 10% correction on the Nifty valuations would be entirely justified. So you're talking about 8,600, 10%, 800 points down on the Nifty. That is fundamentally perfectly in the realm of possibility, right? So this is something to keep in mind, right? So let's put that up. FA-wise 22 plus, right? And if results disappoint, FA correction is very possible, right? So this is something I think we need to really keep a track of. One thing to note for those of us who have been in BIC's FA course or even otherwise, that these are based on actual audited results. These are not future earnings we are talking about. We are talking about actual earnings. So of course that is historical, and then there's always the debate of what about the future. But then you know what? More often than not, the predictions are wrong. So let's just leave it at that and just say that this is definitely on the expensive side. I'm sure at least from a historical perspective we can agree on that. Having said that, if it comes to around 20, 20.5, 21, you could see some amount of buying that happens. But just to keep it in mind, if it comes to around 60, 17, 16, 17, then one should think about buying a hell of a lot, right? That will be almost a 20% correction to take the market down to almost 7,000 on the Nifty, right? So this is something that could happen only I think over the next many weeks, unless something catastrophic happens in the Indian market, which at this point is very, very unlikely. Okay, so that is, I think, the big picture on the Nifty. Let me just put this, then we can start looking sector wise, right? I hope somebody just keeps a track of me finishing all of it. Sometimes I have somehow missed it. So I'm just going to go in alphabetical order now and start with auto. So you can see that autos are way expensive. So I'm not sure exactly what the hell is going on in autos here, right? So including the 2008 valuation time, the auto index is ridiculously on the expensive side. And even if it comes down to 30, that's almost half of where it is. It is 52.24 right now. It would still be um, expensive. So, you know, if you look at from a PEG basis, price earnings growth, is the auto industry going to grow by 50% earnings growth in the coming year? I don't see that happening. So I really don't understand auto valuations. But you know what was interesting is that it actually stays here for quite a lot of time. That's why these histogram bars are on the higher side. So haven't really been able to figure this out from a fundamentally. Maybe the Indian markets are just, I don't know, all markets in some way are crazy, and this is one of the craziness of Indian markets, that the auto Ps tend to be on the high side. So fundamentally this is also not looking good at all, right? So autos expensive, right? Very expensive. 50x plus it is, right? Okay, then looking at bank. So bank index, so this is the CNX bank PE, not so same thing as the bank Nifty, by the way. Okay, this is the official name is CNX bank. And well, tough to say reasonable. Anything on the right side of the center is expensive, but not that expensive compared to, let's say, the Nifty itself. The Nifty was at 22, this is at 18. Definitely more reasonably valued. And if because of, say, China, because of global commodity prices coming down, crude oil coming down. Oh, by the way, so on crude oil, remember there is one more thing to keep a track of, and that is the Iran US deal, right? Now it has been postponed, and they will get postponing these deadlines, by the way. Now it's still Monday. They still say there are 50-50. That's what John Kerry said, I think, day before yesterday night. But if that deal goes through, and the Saudis are going to hate it, the crude oil price could actually come down even more, because I think Iran would be in a great hurry to export as much oil as it can. It's desperate for dollars, and that is going to cause a even higher oversupply. And then Saudi is going to probably do something to maybe reduce its what do you say, um, price to entice people to buy from it and try to put Iran down. I'm sure Saudi Arabia is at the back end of this whole deal trying to scupper that whole thing. So far, obviously, it's not worked and they must be really pissed. But this is one thing to keep track of on crude oil issue, right? And if all that happens, so my line of thought is that inflation softens, RBI reduces interest rates, and that will definitely be good for the banks. But as you already saw, technically this is um, uh, doing well. And I think the best I can put is just say that banks are FA-wise a little expensive and might be reasonable, right? And when I say reasonable, I'm saying from a forward perspective that they just might uh, have a reasonable valuations to that. Okay, then we've got I'm going to look at energy here, CNX energy, and what you can see on the energy is that, very interesting. Energy is good, and it's not really that expensive. It is, I would say, less than average or just about average. And if it actually goes down, it would actually be quite cheap. And this is very interesting and, in quotes, fascinating, because CNX energy as an index has been consistently going up, right? Uh, right, and it's not very far from its life high of 2014, which means that even at these levels, if it went to its life high, it would not be expensive. So I hope this is really making sense. This is a really, I think, good find from a fundamental perspective. And as a matter of fact, if there's any correction that happens on the CNX energy stocks, it would be really a good place to enter, right? So let's put that down. Where's energy, right? Okay, just put it here. Strong technically, and FA wise close to reasonable valuations, right? Buy on all dips. So this is for an investing person. You would want to buy on all dips as far as energy is concerned. And even if energy was to go, it has a good fundamental reason to actually go up now. And if it, let's say, came down to 8,300, that would be about a 5% correction. That would definitely be a good place to buy. So this support level here of 8,250, I think, just got a whole lot stronger because of a fundamental review that we did, right? So that is, and I'm going to put a smiley on that. Okay. Then we look at, okay, FMCG. Interesting again. So FMCG a little bit on the expensive side for sure, but close to good support levels of FMCGs at 35x. So 36x is where it is. If it comes down by about 2.37x, and that will be about 10% correction, 8 to 10% correction, then FMCG could be a good place to enter. So so the FMCG correction that you're seeing for an investor could be a buying opportunity, right? So this is again more and more interesting because while the index is expensive, so many of the sectors are actually quite cheap, right? Starting with banks, autos was the very expensive one, energy was fine, and we were looking at FMCG here. Where did it go? I need to have a system to make this neater. Anybody with ideas and suggestions, please feel free to let me know after the session. Where is FMCG? I didn't even write it down. Okay. FMCG, FAYs near good long-term PE valuation levels. 10% down, good place to buy. All right, so again from a investor's perspective, okay, something caught my attention here. I should have done it with banks, but there's CNX Finance, which I suspect has the non-banking finance companies, your housing finance companies, etc. Like things like Bajaj Finance and Diwan Housing Finance, and you can see that those are also very, very reasonably valued. So no wonder something like LIC Housing Finance might be doing well. Again, from a fundamental valuation perspective, this is a good place to be, right? Okay, so that is CNX Finance, and oh, my notepad is disappearing. I should put this in here. CNX Finance also looking very good from a valuations point of view. Okay, all right, and then oops, okay, let me look at infrastructure. Wow, this is really nice. Infrastructure is cheap, right? Definitely on the lower end of this, right? Sorry, here is infrastructure. CNX, very healthy valuations. I think on the infrastructure side, if policy decisions, right, lower interest rates, better execution happens, then this is one place where should be in, right? There is no doubt about that, right? So it requires patience, right? But it is definitely a good place to be in. Okay, then we have let's look at IT. So interesting. So IT almost right in the center. Of course, this does not include the 2000 .com boom data. So we've just sort of ignored that. But clearly, IT is not expensive, and this is definitely very, very interesting. So lower levels of IT could be a good place to buy. So technically not good, but fundamentally starting to show value, right? Where is IT? This is becoming a mess. CNX IT, technically short, but FA wise near Good valuation. So you know what? This may not really, the IT space may really not fall too much. There was a Gartner report somebody spoke about in the Wealth Lab about reduce IT spending in the developed markets. Then the question is whether that means more growth for India, and they look for cheaper uh, um, sources of products and services, or does it mean less growth for India? I don't know. If you look at the TCS results, so far not very heartening. So that will be a place to watch out for. But even if it maintains status quo for the next 1 or 2 quarters, and let's say the market corrects about 10% on the IT side, then that is also looking like another good place to uh, be going long on. Okay, then let's look at uh, the metal index. Wow. Okay, this is becoming fun actually, right? So CNX metal is almost the same way as IT index is, right? Uh, it is good valuations, right? I think you could get a sentimental hit maybe on the metal index, and then it'll go down maybe a little bit more, but at 12x, it's almost half of the Nifty valuations. And suppose, as we discussed on the CNX metal chart, if it drops by 10%, and then this becomes around 11 or somewhere here, then that would really be a good place to buy, right? So metals again looking very healthy from a long-term perspective. uh, Let me see if there's okay, there's reality. Let's bring up reality. All right, so reality also looking, I wouldn't say it's as good as metals, but reality is also not looking bad at all, right? So, uh, okay, okay. So this is. I'm slightly at a loss for words, honestly. Wasn't expecting things to be this attractively valued. I was expecting things to be more on the expensive side. So what is keeping the Nifty so expensive is what I'm wondering. Is it basically the autos that is keeping the Nifty expensive? Because everything else seems to be reasonable. So what are we missing in the picture? If anybody has any clue, please do chip in. And then let me bring up the Nifty Junior Index. Where is that? Yep. Whoa. Now this is a surprise. The Nifty Junior Index is on this side, just like the Nifty is. It's on the expensive side. Ugh. I don't have. If anybody has institutional level access to the gurus of finance, can somebody just please figure this out, because this is not adding up for me. Um, I mean, at a at a top level, you've got all these indices expensive, and you've got a whole bunch of uh, what stocks not that expensive. I mean, valuations not that expensive. So, what is going on? I mean, auto is expensive. Okay, banks are on the expensive side. Okay, banks do constitute almost 25 to 35% of the valuations of the Nifty, and then energy is reasonable. Infrastructure is definitely on the cheap side. IT is okay, so maybe that's also IT, banks, and autos. Metals are low, so realty is low, and then you have this, right? Okay, so we've basically covered all the important sectors that I can think of. I don't think I've missed anything. Uh, Here's PSU banks, by the way. So that's on the expensive side, but the whole banking side is a little bit on the expensive side. And that's it. This is our list, all right? And we've covered everything. If there's something here which you feel I've not covered and you want covered, then let me know. Even if you look at the, this is strange, you know, look at the CNX 500 here. You've got it on the really expensive side. All the broad indices are expensive except for some specific sector indices which are not expensive. They're all on the cheap to okay, and a handful of this. So beats me, don't ask, I don't know. There's something in the math, there's something in the calculation, there's something in the weightages which will probably explain this, but definitely don't have the time on today's IMR to really crack that, right? But overall, I think this is really a good find in terms of what are the uh, opportunities to actually jump into in the week ahead. So you've got I need to basically create a table here and say technical view and fundamental view, and then we can sort of balance these things off. Okay, we don't have something for consumer durables, we don't have something for capital goods. I'll just have to put that under infra. Those are all BSC indices, and unfortunately BSC has become real conjuice in not giving FA data free. It used to actually, but now it doesn't, so we are unable to access that. And again, if somebody has access, then please tell us. So yeah, reiterating the same thing, and I think it's really a good case for those of us who are looking to build portfolios. Please keep some cash ready. If some correction will happen, I mean, it's just a matter of time. This is the nature of the markets. When, how much, who will trigger, what event is unknown, but it basically will happen. Uh, Very unusual for me to say will, but yeah, that's the nature of it. And basically, you've got a one-way move from about 6,000 to 9,000 unidirectional, and then 9,000 to 8,000, which is about a 10% correction, which is more like a secondary correction in an overall bull market. 10% is not much. Of course, if you're in the market, it may not feel like that, but you get my point. And if from here, from a fundamental perspective, we could just be rallying over the next many quarters. And I think results is going to be the key this time, right? It's really going to, all right, okay. So let's put this also, right? Bad monsoons, right? So looks like the IMD, the Indian Meteorological Department, is quite right this time with bad monsoons. And we really need to see where this is going to head, right? Okay, so I think that's it. I mean, I can, again, one of the things that we should do a lot more on, uh, if you want to do any individual stocks, then what are those individual stocks is the question that you may want to look at. We could definitely spend some time, but just to wrap it up, I think apart from autos, metal, FMCG, and IT, which technically need to be shorted, both realty and metal are at decent valuations. So at some lower point, there's going to be some, I think, decent buying, which is there. Um, and there's really nothing fundamentally to feel that things might go down a lot in individual sectors. However, like I said, the Nifty Junior, CNX 500 all put together on the expensive side, and beats the life out of me as to why they're like that. Um, That's it. Any comments? Anyone wants to say anything? Wants to look at any particular charts or events or news? Then let's put that in the chat box or just unmute yourself. Anyone? Session. Okay, so basically we've come to the close of today's session. We haven't looked at individual stocks, been completely, I think, sidetracked and taken aback by the FA charts. So my heartfelt thanks to Sid for this. He is the brain behind um, our fundamental charts, and there's more in the works where that came from. Hopefully in the future we'll have that up for you. My only suggestion is that look at all these indices for individual stocks, since in India we are so poor on the ETF approach to these things, and you will definitely find, I think, some great long-term investment opportunities if the Nifty say comes to 8,000 or any of the sectors correct by anywhere close to 10%. And that trigger could happen because of anything out there in the world, not because of this particular sector or something in India for that matter. uh, and just keep a lookout. I would also say that I think be result specific. We've already found the opportunity. I think the sectors which are reasonably priced, and any companies that come out with good results, good guidance in this quarter for themselves, uh, in the infra space, in the reality space, or some policy decisions, those should be the triggers, I believe, to become stock specific and go into or any of those favorites. So we will have a review. So I hope that you liked today's session. I really do request as much feedback as you can. I know it's a pain to type, so pick up the phone. Maybe Monday onwards. Tomorrow I'm in class, and just just let me know what you think, and let me know what we can do to make the IMRs better and better. Right? Okay. So thank you. I'll have the recording up hopefully by tomorrow afternoon, and you should have that opportunity. And let's look forward to what happens on Monday. So thank you for your participation. Good night and have a great Sunday. Bye.